Welcome to this afternoon's session on industrial logistics. My name is Kevin Turpin, and I'm the Regional Director of Research for Central Eastern Europe at Colliers. And I'm just going to spend the next sort of 15-20 minutes just going through some of the market statistics and trends that we've been seeing over the last 8-9 months. So without further ado, I'll get started. Obviously, the main elephant in the room at the moment is COVID-19. And I think one thing to highlight here, particularly for the Central and Eastern European region, is that during the first wave, early on in sort of March, April time, the Central and Eastern European markets actually managed the sort of control of COVID extremely well, and were sort of the envy of a lot of Europe back at that time. And when the second wave came, essentially that completely reversed. And as you can see from this chart, in countries like Slovakia and the Czech Republic, the number of cases that have been recorded, partly thanks to increased testing, were up as much as by 16 times. So naturally, this is continued the lockdowns and impacts on the economies of Central and Eastern Europe, and of course, globally, well into the sort of the later parts of this year. Now, if we look at CEE investment flows and how that indeed has been impacted, we can see for the coloured bars for 2020. Investment volumes for this year, for the first 3 quarters of the year, are down 12%. And depending on how the remaining few weeks of this year go, we look like, investment volumes for the year could be down anywhere by about 20%, potentially a little bit more, which is largely in line with, the rest of Europe. Now, whilst transaction volumes overall are down, the average size of deal is actually up by 31%, despite the number of transactions being down by, again, a similar amount. So again, this shows that investors are in these times particularly looking at larger deals, but also portfolio and platform transactions. And this is particularly the case in the industrial and logistics sector. And just to sort of briefly to sort of talk about what people have been doing over the last 8 to 9 months. Essentially, we've been looking that offices are still remaining with popularity, although perhaps there's a bit more focus on core at the moment. There was a very large residential deal in the Czech Republic, which made up quite a sizable chunk this year, with a transaction of 1.3 billion. And then, there's obviously been a sort of severe drop-off in retail for obvious reasons. But to clarify that again, that's largely been within shopping centres, with retail parks actually performing quite well and being quite well sought after. And that leaves us obviously with industrial logistics, which has performed very well. Again, we'll come on to that in a second. For the first 3 quarters of this year, industrial logistics investment flows are actually up on the full year of 2019. There is a possibility, that we could see a record year this year, but again, there is a lack of product in the market for the reasons that are well known to us. That there are a number of major developer investors in this region that hold on to the majority of the stock and are long-term players and rarely put up any product for sale. So and again, as you can see from this data here over the last few years, Poland again has been the main source of that. With 1 or 2 developers who typically would put assets up for sale once they've been completed. Again, Poland has attracted most of that volume. When we're talking about who's involved behind these transactions, Again, over the last 5-6 years, some very common names pop up, and these include GIC and their partnership with P3, CIC from China, GLP again, who recently made the acquisition of Goodman, Mapletree again, Asia Pacific, CTP, who are obviously expanding their network into southeastern Europe, and of course CBRE, GI, have also been incredibly active. Now, if we look at pricing, since the onset of COVID at the beginning of the year, certainly there has been some correction in the market. And this particular graph or chart shows the colourful lines at the bottom of the screen. Sorry, the colourful dots at the bottom are our current view on where yields currently sit. And the black line is essentially the lowest point or the trough following the global financial crisis. Now, although this is a different crisis entirely, there are obviously some impacts that we are seeing. And whilst in some sectors there's been a lack of transactional evidence to clarify or quantify these levels, overall, I would say that we've moved offices outwards by 25 basis points. Retail shopping centres have largely moved out by 50 basis points, with potentially more room for growth or for movement there. And industrial logistics have either remained stable or have actually compressed, particularly in markets where we'd previously seen little compression. And as you can also see from this chart, we've compared those with the German Big Four cities, and again also against 10-year euro bonds and interest rates, which both of those currently sit at around 0. So again, overall real estate still looks like a very compelling story. The question particularly in mind for industrial logistics is how far these prices will come in. You can see that in a couple of markets they're already challenging shopping centre yields and are pushing on office yields. In addition, the question is where the product is going to come from for sale. So in some markets this is incredibly tight, and as I said, the investor appetite into industrial logistics is incredibly strong, particularly given that some of the other sectors are largely off of the radar, and with most of the investors that we're talking to right now, industrial logistics is probably number one on their list for acquisition. Just a couple of months ago, we at Colliers completed a report called Exceeding Borders, and this covered 17 countries in the Central and Eastern European region. And I appreciate this map may be a little bit challenging to read, so I encourage you to read the report, which I'll provide a link for later on. But essentially, the Central and Eastern European region, as we're looking at it here, from Estonia through down all the way down to Albania, in terms of modern industrial logistics stock, is equivalent to 50 million square meters. Now, to put that into context, Europe as a whole has around 350 million square meters. So Central and Eastern Europe is plus minus about 15% of Europe. Germany, again, one of Europe's largest market, has 70 million, and the Netherlands, again, just over 30 million. Now, another sort of aspect around the demand for industrial logistics going forward. If we take a market like the United States, where there is somewhere close to 900 million square meters, there's still a huge growth potential there, considering that per capita, the US has about 2.5 square meters of warehouse stock per person, whereas in Europe, it's actually well under a square meter. So, as we've seen with, the growth of e-commerce, which again is, in many countries across Central and Eastern Europe, is still relatively low, still below 10% of overall retail sales. Again, we see continued demand going forward. But this demand is being met with just in many cases a lack of available space, with many countries featuring vacancy of less than 5%, with a number of developers opting to do build to suit or sort of pre-lease developments as opposed to speculative developments. Rents across the region have largely remained stable. But we've also seen increasing rents, particularly in specific locations where there is a shortage of supply. So rents, again, anywhere between 2.9, which we're seeing in markets like Poland, and I'm sure some of the panelists might discuss this and how and why these lower levels are realised there. Up to sort of 5.5 euros a square meter a month in some of the sort of let's say slightly less developed markets. Land and availability again varies from country to country, as do the costs. Again, in some of the more mature markets around Poland and Czech Republic, land availability and around, specifically around capital cities, is starting to become more scarce. And hence, the prices of land, are rocketing up well above 100 euros. The sweet spot for industrial, is probably around 50 euros a square meter. But again, it is varied, and that is largely driven by availability. In terms of costs, we looked at each of these markets and looked at typical hard construction costs, for let's say a standard warehouse with permits, and again these were quite it was quite stable essentially in terms of the costs ranging from sort of 300 euros to 600 euros a square meter. But again, overall construction costs in the last few years have risen quite considerably, by as much as 25% or more in some cases in some countries. So again, I think the market indicators and general sentiment in the industrial and logistics market is largely strong. Demand for space has been stable. And again, has been increasing in some locations and perhaps slightly slower in others. And again, this is probably one of the most resilient sectors, throughout this year. But again, is not immune, to all of the factors. Obviously, COVID has dominated the news and dominated most of our lives for the last 8 months or so. But the headlines that we've got here were here, or most of them were here before COVID, and still remain. So we've got a number of government supporting measures that are largely continuing or coming to a close, and we won't sort of understand or fully comprehend the impact of those for another few months. And this is largely also interconnected with a lot of political noise or events that are currently ongoing, not only within the CEE region, but obviously globally. Obviously, the US elections is one, and again, some discussions at the European Union level around budgets, which again has recently hit the news. So Economies and Cycles, I'm sure the economist who spoke earlier has covered a number of these elements. But certainly, most markets will face an economic downturn this year, and depending on how things go, particularly with vaccines, that the view is that the economies will pick up, from middle of next year to late second half of next year onwards. But ultimately, you could argue that we were already at the end of in 2019, coming to the end of what was a very long cycle, almost a 10-year cycle. And again, along with those political events, there is some issues, and will continue to be some countries playing their position in terms of nationalization and looking inwardly, protecting their assets and so on and so forth. Throughout this year, we have seen a major shift, and that comes to corporate governance. This is the same in the industrial and logistics sector as it is in the office and retail sector. So whilst on one side you've got logistics companies and e-commerce companies growing at fast rates, on the other side you've got manufacturing companies which might not necessarily all have long order books for their products and services. So again, this has been a major focus of banks and investors and developers on the governance of their occupiers in their parks. To some extent, we've seen a little bit of sale and leaseback activity, where we would imagine that occupiers would look to sell their properties in order to raise operational capital. That has occurred to some extent, but again, it comes back to the governance of those companies, and after some of those opportunities may not be as attractive as they may seem, but nonetheless, some of them have happened, and both sides have been very, very happy. I already mentioned land availability, which is becoming scarce in certain locations, and permitting again is a common theme in this region. In certain countries being a lot worse with the permitting process, and I'm sure many of our investor and developer clients know this only too well. Land and construction costs I've already mentioned, so land prices increasing in most places, and construction costs also on the rise. And labor availability, both for the construction from a construction point of view, but also from an occupier's point of view of attracting labor. Now, for this year, I think in most countries, it's forecast at the moment that for 2020, most countries in the region will see a growth in unemployment by at least of 1 percentage point, which is actually not bad in consideration, but again, we may or may not see more of that come through once government measures start to end or fade away. And again, other elements, and again, I'm sure the panel will talk about some of these. We'll see a great deal of change over the next few years, particularly in the innovation around industrial and logistics properties and the automation that goes on inside those four walls. And again, some of this is led by efficiencies, not only from a sustainability point of view, from an energy point of view, because as I said, as the more we become more automated, the more demand there is on energies, and of course, the impact on the environment, and also the changes in parks, in logistics parks, on the social side, looking after employees who work there, creating and offering more services for those employees as well. Rents and incentives we've talked about a little bit. Again, costs are going up. The land prices are going up. Generally, all costs are going up. So again, this will push on those. And incentives again are typically driven by landlords at the moment. There has been less of a pressure on some landlords to offer incentives, but again, it's largely location specific. We've talked about growth of online, and obviously that's been born, or the acceleration of that has been born out of COVID, and again, and all the challenges that come along with that in terms of the fulfillment centers and returns. But again, not only that, but some of this disruption that we've seen to global supply chains. And we're of the opinion that the Central and Eastern European region is very, very well positioned to take advantage or see the benefits of global supply chain reshuffling over the next few years. After all, it is a rather large and complicated process, and it is not a sort of something that you can do overnight. Automotive is very, very key for this region, and we've seen some headline news recently that Volkswagen is moving the production of, for example, the Superb to Slovakia. I think it's roughly €1 billion investment. At the same time, BMW is looking to build electric cars in Hungary, and again, also I think Skoda is also looking to again do the same with electric cars in the Czech Republic. So again, whilst that industry has sort of come under some pressures in recent times, electric cars are sort of partway replacing some of that activity, and will be very interesting and exciting to watch alongside other things like battery plants being established. And finally, again, Brexit. We largely, thankfully, forgotten quite a bit about Brexit, but that is still going on. It is still planned for the end of the year, as will global trade disputes and wars, along with tech wars, will continue to play a role in the months to come. So again, hopefully that's been a good overview of what we've been seeing, and again, we look forward to following a number of these over the next few months and seeing where it goes. Thank you, and I'll hand back to Richard.